I'm lucky to be conducting this session after Mr. Kalsi-san spoke, Mr. Raja spoke, and everybody else spoke, and they really emphasized on the financial prudence and how you have to conduct your business. Uh, I just want to reiterate that the banking sector has a very large role in the dealership business. So OEM business has been one of the core part of every retail bank in the country. And the overall exposure is, I think, over 70,000 crores to the industry. And the dependence of the retail side, where it is largely lofted to the automobile retail, is actually very, very high. The industry is definitely going through a tough phase, and not just the banks, but the OEMs, the dealers, and everybody else is involved in it. So what we will try to touch upon in the next few minutes is that, what are the measures which are very important and critical for us to undertake to, come out of a tough phase. Over the last years, the industry has seen a phenomenal growth. And earlier it was kind of impacted by the surge in the rural sales, and then finally to the urban, and then urban and rural both. Thanks to the technology, thanks to the various apps, thanks to the research mediums, that the customer reach was made possible, and that kind of resulted in the enhanced sales. And this enhanced sales reached to a point wherein the investment into the whole business actually went up, maybe by virtue of new dealerships, new outlets, the urban dealers going to rural, rural coming to urban, and so on and so forth. But there has been a lot of expenditure, there has been a lot of investment, to use the right word, into the business. And once we are seeing a little bit of slackness in the sales, the overall ecosystem is for sure getting impacted. There are some short-term, long-term gaps which are available. The banks have been primarily looking at dealership option, not like typical SME funding. So this has always been based on the relationship, based on the previous performance of the dealership. And while the banks, and Mr. Kalsi touched upon this point, while the banks should have been very closely watching at the ratios, but I think being part of the integral part of the ecosystem, the banks were a little more relaxed in terms of looking at the dealership business, thinking that 2 months of sales here and there doesn't matter. It can soon come back, and once again, once the momentum is set, then the working cycle will come back to normal. The fact remains is that once the period has elongated, the concerns are high. And the dealerships who have, who had less of their capital and who had expanded, who had invested or a lot into their expansion plans, finally came under a lot of pressure in terms of heavy debts, what they were having. And with continued slackness in the sales, they were not able to survive. Now, the hopes are always alive. And I'm sure the government also is thinking very seriously as to what are the ways to very seriously look at this industry to see that there is again a lift in the sales. Hopefully it should happen sooner than later. We are expecting a lot of initiatives, what we keep hearing, reading here and there. While those factors will happen and they will take their own time, and we will see their impact as the time goes, I think it's very, very important that each one of us play our role very, very carefully. And I'll touch upon that by, speaking about the role of each of the partner in this. I think from a dealer perspective, where they have seen easy flow of money through the inventory route, it is going to be tough. It is already becoming tough because their repayments in many cases, and I'm not saying in all cases, do not support the kind of lending facilities what they have. They are sitting on a lot of assets, sometimes on a very high rental and sometimes on investments into some very expensive assets. I think time to look into that. The inventory levels have to come down, very important, and we have to really come back to an inventory cycle of, not more than 15 to 20 days. It's not prudent. It's not possible to survive with anything higher than that. And thereby a close control on the inventory. And for sure, not to fall for the wholesale, but rather look at the metal out data. And the whole planning has to be based on the metal out and not basis what are the month end or the quarter end incentives and stuff like that. That is very, very important. This was a wonderful session we had wherein people spoke about lead management and closure and, where is the customer researching and here, where he is coming. I think the dealerships are becoming, as Mr. Sanghi said, they are becoming more efficient, but possibly they have to become more efficient because there is an infrastructure after all, which is, where the sales actually is getting completed. So we have to make use of every possible opportunity which is available where a customer has come to you. While the dealers have to a lot to do, I think it is also very, very important that the manufacturers take some very prudent steps. Thankfully, now the data on retail is available and the industry has started talking about not wholesale, but the actual metal out, which is the retail, which is a very, very positive sign. There are some very good signs by the industry by slowing down on the production, which means that there is a very effective step being taken in terms of reduction in the inventory levels at the dealership. This is a very, very promising and positive step. The manufacturers also will have to safeguard the banks, which is one of the very, very important step because, one is it's a brand loss once a dealership goes belly up, but then for a bank, it changes the entire, there is a paradigm shift in which the banks have started looking at the credit and this is largely impacted because of large number of dealers going down. So OEMs will also have to step forward and work very closely with the banks. Things like why should a stock audit data be different for a bank and different for a dealer and different for a manufacturer. So we will have to come to a common platform wherein, there is a transparency and there is a fair amount of understanding and the stress is realized and understood much before it shows its actual impact on the viability of a dealership, extremely important. And last but not the least, I think somewhere going off a dealership is very painful for the OEM, for the dealership himself and for the bank. But it's also very important that if you as a dealer do not see a profitable model, if you do not see that the business is actually going to make a sense, then take a call at a time which is right. So this not only gives you the exit route to a weak dealer, it gives the exit route. It also gives an opportunity for a strong dealer, which is important for the entire ecosystem, to come out more strongly. And that can be, either by way of more sales per outlet, or it can be, by reduction in the discounts and reduction in the overall cost. So these are, I think, some of the very, very important steps which the industry have to take. And nevertheless, I think the operations have to become, not only lean, but more efficient, more effective. The financial prudence is of utmost importance. The dealer principal himself has to be involved because ultimately you are into this business for making money and not for anything else. So extra cost, wherever it is, it has to be cut down. Extra outlets, maybe, somebody said that, Mr. Kalsi in fact said that at this point of time you can also get better proposals, better options in the market. So if you can reduce your rent by moving to a different showroom, if that is what it takes, or maybe in terms of opening a new service setup at a much lesser cost, then those are the kind of steps which are sometimes hard steps, but very, very important steps to be taken in this phase. I was seeing a beautiful video by the owner of Metro Shoes. I don't know how many of you have seen it. It went viral a couple of days back, as a lot of you are raising hands. I think a beautifully made video. This is not the first time we are seeing that there is a slackness in the sale. This has happened in past. This is happening now. This will also happen in future. This is a way of life. this has to be looked at as an opportunity. I think for all the three partners, whether banks or the dealers or the OEMs, this is the time to actually stop, take a stock, look back, and take effective measures to see that the dealership business remains profitable, you are into the business, and when the U-turn happens and when the demand is going up, you should be best placed to see that you are there where you are required. So it has to be looked into, in conjunction. While you have to cut cost, you have to control the operations on one side, you also have to be future ready. Some of it would mutate, would mean, mutation in your existing structures, in your existing approach, in your reach to customer approach. But a lot of it would also depend on how you are controlling your financials and how you are actually controlling your cash flows. That is very, very important. So with this, I would like to end my discussion on the topic. If there are any questions, you are free to ask.
So I just wanted to understand, going forward, already if we look at the industry, especially the dealer community, they have huge complaint that the banks are not very easy in terms of releasing funds. Going forward, do you think the situation will be better, improved, or you think that the status quo will go for a long time? And what are the reasons, core reasons why the bankers are a bit cautious when it comes to lending to these dealers in the automobile industry as well?
So Mr. Kalsi actually made a very, one line which is still resonating in my ears. He said that the banks were easy lending, right? He used a different language, but as I emphasized, the intrinsic model of inventory funding was, financials of course being there, but in addition to that, the length of operations, the relationship with the dealer, and certain softer aspects were also into the play, right? So one thing is very clear that for the survival of dealerships, while a lot of people might not like it right now, but for sheer survival, I think some strict scrutiny is very much required. So when people say that, the banks have been tough, actually the banks have not been tough, because if the banks would have been tough, then the banks would have been, and I'm sure Mr. Khanna would like to touch upon this point when he comes on the panel. If the banks were tough, then they would have actually shut down this product, because there are avenues to, also invest this money into some other businesses. But the fact is the banks love this business, and the banks have been in this business since inception of this business. But for sure, as I'm saying, everybody will have to get their act together. I think the banks will also have to clearly look at as to what is in store for them. Please understand that when one dealer goes belly up, for a bank it is nothing less than 10 to 15 and sometimes 50 crores to 100 crores. And at that point of time, it is only the bank, because there is nobody else. And hence, the banks will have to be careful for the dealer's own health and for the health of the OEM and for the health of self. For the banks, it is important that it happens in a very, very structured way. So while people who have a good understanding of auto retail from the bank side would still be flexible as compared to the MSME lending, but I think certain measures and certain practices and certain discipline will have to be maintained by all of us for the survival of the industry.